Welcome to Chit Chat Stocks. This is our weekly Power Hour episode, and I am one of your hosts, Ryan Henderson. I'm joined, as always, by the one and only Brett Schaefer. We have a number of topics to discuss on today's episode. For reference, we do these shows every week live on YouTube at typically 10:30 Pacific time, 1:30 Eastern time on Wednesdays. Then we also upload them to the podcast player. So wherever you get it, we appreciate you for tuning in. We're going to be talking a little bit of Uber this week, which has been pretty controversial. I would say sort of a polarizing company at the moment because of some of the autonomous vehicle discussions and debates going on. But we've also got some other stuff. An old flame of ours, at least I don't think we both own it anymore. Match Group had an investor day, which we'll be going through as well. But I guess, Brett, how are you this morning? It's officially the dead week, I think. Like this week and next week are the dead week. No earnings whatsoever.
And into the new year. Yeah. Christmas, holidays, New Year's Eve, New Year's Day. Nothing much happens. We got not inflation today. The Fed meeting. I guess they're going to lower interest rates by 25 basis points. Yeah.
Have
That's
they been looking at
exciting.
the meme coin market?
Fart coin, yeah. It's
It's like they don't
what's
even
that
pay
market
attention
cap?
to it. It's I did read a stat that it was like more than 40% of all public US companies, which is just a sad allocation of capital, but that's okay.
There's a lot of really small US public companies out there, and all of the big ones seem to be staying private. Did you see that Databricks raised $10 billion in a Series J? Series
Series
J.
J.
A, B, C, D, E, F, G, H, I, J. That's 10.
Oh my gosh.
That might be a
And
record.
probably seed rounds too.
Yeah. Could be a record. Could be a record.
Which, as a public market investor, that sucks. That kind of sucks. I am hoping, we talked about this last week, OTC markets. I'm hoping that becomes so professionalized and such like there's no stain on that it's really kind of becomes more accessible to be in the public markets. Because it seems like the NASDAQ and New York Stock Exchange are prohibitively expensive. But we're going to be talking about some other topics this week. Before we get to that, though, I want to talk about our friends at Public. Heads up, folks, interest rates are falling, but you can still lock in a 6% or higher yield with a bond account at public.com. It's a pretty big deal because when rates drop, so can the interest you earn on your investment. A bond account allows you to lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds. So while other people are watching their returns shrink, you can sit back with regular interest payments. But you might want to act fast because your yield is not locked in until you invest. The good news, it only takes a couple of minutes to sign up at public.com. Lock in a 6% or higher yield with a bond account only at public.com/chit chat stocks. All right, Brett, where do we want to kick things off? I will say I've got a topic that I'm quite excited for because I did, I guess, a little bit of digging, but we can save that for later if we want to. It's
Okay.
Uber and Waymo.
Let's talk Uber. I thought we talked about them last week, or was that just briefly at the end? Or was it more of the Waymo network? I can't remember. It's
It was
only
the
been a week.
cruise. Yeah,
The cruise.
cruise
Okay. Yeah.
basically shut down, and that was seen as kind of a positive for Waymo. We also talked the quantum computing breakthrough, which we
Right.
are such masters of topic on. So
I think, well, hey, to be fair to us, 99.9999% of the people in the world don't know anything about this topic. And I'm not sure the people studying quantum computers actually understand that topic just because it's so wonky and complex. So if we sounded dumb, well, I think that's pretty much how everyone sounds about it. You kind of just say, "Hey, we're revolutionizing computing." It might revolutionize computing. That's essentially all we could add there. But we did have a lot of people when we asked wanted us to talk about Uber. So maybe we can start with that. And have you confirmed? And maybe I'm kind of leading a question here. Is it going to be your next stock research episode for January?
potentially, this is kind of a bit of a research report in and of itself because we're going to dig into the kind of a little bit of the valuation for Uber as well. But just to, I guess, paint a picture for anyone who has not been on financial Twitter or in financial communities and seeing the news regarding Uber, Uber stock is now down 27% from its highs. So not a huge drawdown, but it does trade at its cheapest free cash flow multiple ever. So, which for what it's worth, free cash flow is not that relevant for them given that they have a lot of stock-based compensation, but they've gotten a true gap profitability and their EBIT margins are inflecting pretty quickly. So, anyways, I'm just going to use the free cash flow multiple because it's a decent barometer. So 29 times last 12-month free cash flow, which might not sound that cheap, but the margins are climbing quickly. So the forward free cash flow multiple is somewhere around 20 times, depending on whether or not they hit their estimates. So on consensus estimates, basically 20 times forward free cash flow. However, I guess the concern here and what's driving the majority of this drawdown is really the success of Waymo, Alphabet's or Google's self-driving or autonomous vehicle division. And there's been a lot of positive news for Waymo recently. So for starters, the big thing that really drove this was a third-party data provider, an alternative data provider, released this chart that was let's see, it's basically ride sharing or ride hailing market share in San Francisco specifically.
The scary Yipit data.
Yeah.
Everyone gets freaked out about that Yipit data.
Which I will say, I just feel like alternative data just gets so overblown.
Unless you
And
wanna be our sponsors. That if Yipit
yeah,
wants to be our sponsor, I will hype you up to no end. But don't these get
it's
disproven
valuable.
in earnings? It can be valuable, but sometimes you see screenshots getting tossed out there from things like the cloud providers and oh, AWS is plummeting, and then the quarter comes and it's fine. So sometimes I feel like they misstep here, but continue. What's the
Yeah.
data showing?
So the data basically shows that Waymo in San Francisco has been rapidly gaining share compared to Lyft and Uber. Lyft, maybe you can just share this chart that I've got here. It's basically Uber's been at between 60 to 70% market share for a little over a year. Lyft was at around 30%, and both of them have been dropping. Uber's still the leader, but Waymo has officially surpassed Lyft for ride hailing services. The concern here is that this obviously continues, and investors, I guess, maybe logically extrapolated this out as this could be happening everywhere. And so it's led to a whole bunch of concern around Uber. Now, last week we talked about this. General Motors shut down its robotaxi efforts. That means yet another competitor is gone for Waymo. And then this week they announced an expansion into Tokyo. So for anyone that thought, well, it works in the States, but at least Uber's got the international foothold.
I had that take.
Yes.
It aged so poorly in about 1 week. Less than a week, honestly.
Yeah. And for what it's worth, just a slight expansion into probably a couple areas or a couple neighborhoods in Tokyo does not mean that they're going to conquer all international markets that Uber operates. It's probably going to be quite a while. But it seems like Waymo is expanding quickly. They've gotten into, I think, 5 cities in the States now. They just announced 2 expansion markets in, I think, Austin and Atlanta. And then they've obviously operated in San Francisco. They've operated in Phoenix. And I think there's one more market that I'm missing. Um,
Los
but
Angeles and Miami
Los
also.
Angeles, Miami. So I guess this Tokyo would be the 7th market. The concern, I think Uber investors are justifiably worried, I would say. It feels like, I think you made this comparison, the TikTok threat to Meta from 2 to 3 years ago. Now I guess maybe a little longer. Now you've got Waymo potentially disrupting Uber's market. And the bigger concern is that Uber, like Dara Khosrowshahi, I think I'm saying that right, might be botching that. The CEO of Uber, he basically said, like, we think autonomous vehicles are going to expand the addressable market overall. and we are going to be the connector. And the idea there was that you have companies like Cruise, and you have companies like Waymo and Tesla, and there's all these different autonomous vehicles that they need the demand. They're going to come to Uber to do it. With the competitors dropping like flies, you now have consolidated power basically to Waymo. If you're Uber, you're happy if Tesla becomes kind of a autonomous vehicle provider as well. There was a conference this week, an investment conference that the CFO, Uber CFO, went to, and basically the whole thing was focused on the threat of Waymo, and which is kind of funny. Like, you come in as CFO, and like 1 year later, all the questions are like, "You're being disrupted. What's going to happen?" And you thought you were joining like the innovator. Anyway,
And he's the
um,
accounting guy.
yeah, which
What's he gonna say?
yeah. But to put the numbers in context, for now, last quarter, Uber completed 2.9 billion trips. This quarter, give or take, Waymo is expected to complete 1.2 million trips. That's equivalent to 0.1% of Uber's trips. So right now, it is an absolute like tiny fraction of, actually less than 0.1%. It's a tiny fraction of Uber's business, but obviously, if things scale up quickly, it's a threat to Uber long term. And the like, here's what the CFO said that scared me. He said, "Our view has not changed, that we believe the introduction of autonomous vehicles is going to be critical for us to be able to bring on continued supply to grow the business." So kind of treating this as a good thing for them. My discussion question is, do you agree with this? Basically, let's assume that Tesla and Waymo are the only providers in 5 years. Do you think customers will be ordering those rides through Uber, or will they be ordering them through Tesla and Waymo apps independently?
That's a big question. I lean to the idea, and this is really where the debate centers, and people differ and get very passionate about either side, because it seems like there's some very bullish people on Uber and very bearish people that have differing views. And I think that Waymo and Tesla, I guess Tesla hasn't, they're a little bit behind, because, and they're also doing it in a different manner. They're not at the same spot as Waymo, but I don't think either needs Uber to exist. Google Maps already has 2 billion users. If you and it Google Maps is what's embedded in Uber. If you literally search on Google Maps, it gives you the directions, and it can pop up, "Hey, do you want a Waymo to this location?" I don't think adding in that is going to be difficult for Google, and I am not surprised that at an investment conference, a CFO is saying, "Oh, there's a big disruption to our business. There's a potentially big disruption. Well, we actually think it's gonna benefit us." There's no one no one is going to go into one of those and say, "Oh, no, we're screwed. We're screwed. You should sell our stock."
Yeah, I do think you can go in and say, like, "Look, we're monitoring this very closely, and we're not sure what impact it's going to have on our business. Like, we're trying to do the best we can to make it to be beneficiary of it, but ultimately we don't know." But yeah, Wall Street would get scared about that. The
What
only
do you
part that
think?
Here's the part that gave me some consolation. If I were an Uber shareholder, the CFO said, "No disrespect to the Uber ops team, but we do a lot of unsexy work. It is the identifying and confirming that the rider getting in the vehicle is the person who ordered the vehicle. It is handling all the payments activities. Again, high volume payments at relatively low transaction values. It is the fraud prevention that goes with that. It is returning lost items. It is customer service with all the numerous questions and complaints and opportunities to improve service that come with that. It's a very big operations function that we do at scale at an incredibly efficient cost." There is a lot of logistical, operational stuff that Uber has fine-tuned over the last decade. And it's not that Waymo can't do it or doesn't have the money to do it, but is that why they want to partner with Uber? Is that why they have partnered? That part of the business build out is not what they're interested in.
Perhaps that's part of it, but I think at the beginning, the most important thing, and why they are partnering, is they want, if someone is ordering a car, a vehicle, They want to make sure that you never have a 20-minute wait, because if you open the app for the first time, the Waymo app, and you see, "Oh, I can get this taxi, but it won't be ready for 20 minutes," you're gonna go, "Well, I'm not gonna open this one again." And Uber can basically guarantee in almost all circumstances, except for, if you're out in the boonies or it's way late at night, stuff like that, most of the time you can get something within 5 minutes. And I think Waymo doesn't want to ruin that experience, at least at first. But I think over the long term, I see this stuff where they go, "Oh, we're handling a lot of payments. Oh, we have a lot of back end software." You know who owns Waymo, right? I think they can handle that. Now,
Yeah,
customer support, well, that's kind of something that Google is allergic to. But yeah.
yeah, yeah, and I think a lot of the customer support requests or inbounds are probably related to drivers too, so for Uber, so you kind of
Mhm.
eliminate that to some degree. The My first thought was like, well, maybe Waymo can't go everywhere, right? Like it doesn't make sense for them or it's not practical for them to be in the suburbs, which makes sense because for one, Waymo does not deliver to airports. It's too much of like a logistical nightmare for drop off and pickup.
Oh, really?
Yeah. So, and that's where a lot of the like Uber requests from suburban America comes from is, getting dropped off at the airport.
And I'm guessing profitable.
But I would guess, and I don't know if it's been broken out, that the majority of Uber volume is not coming from suburban America. Like those people have their own cars, they drive themselves everywhere. I would bet the bulk of it comes from the cities, which is really where Waymo is trying to build its foothold. So it it does feel like a very material risk. I could see both businesses continuing to grow for the next 3, 4, or 5 years. And all of a sudden it starts to feel like, oh, Waymo's wearing off and Uber's fine, it can grow too, but it starts to slowly trickle in. The growth rate starts to decline at Uber as Waymo starts to steal more volume. I do think they are like one accident away from having some scared people not willing to adopt Waymo because there's like one accident,
That's
like a
true.
death, which
Although
is
there's
funny.
probably, yeah, there's constant ones, I'm guessing, from human drivers. Well, I'm not guessing, but within the ride sharing ones, there's gotta be constant crashes from the human drivers. But it's a higher expectation. People, it's a new technology. You're letting the robots take the wheel, literally. And there's going to be that high expectation. We saw that with Cruise. I think part of that was them. Didn't they? Uh, sorry, I'm trying not to use a swear word. Not misinterpret, but they fudged their own data that they were sending to the regulators. I think that happened. So part of
I'm
that,
not sure.
they threw some stuff under the rug there. I lean to the side that Uber will be fine, even though I'm pretty pessimistic on some of these developments being headwinds or potential headwinds. But there's just a lot of things that Waymo has to go through to become broad based, a lot of hurdles they have to get through. You have the weather outside of most cities. They're really only in very mild weathered and sunny cities. They can't operate in the rain right now. You have the fact that it takes so much capital to scale up. Then I kind of poked fun at those things that the CFO was talking about, but those are true. And then you have the existing network from Uber, that idea that people go straight to the Uber app and you know that you can have something available within 5 minutes. And Waymo being so small might be a little different. I also would add in that San Francisco is the most tech, like they force new tech down your throat there. That's a little different than other cities.
I know. Yeah. I mean, people are like, anything that takes adoption in San Francisco, a lot of people from San Francisco tend to say, well, this is the future. This is what's going to happen. And I know what happened with Uber, but if you went and polled 50% of people in Nebraska on whether or not they take a Waymo or an Uber, they would have absolutely no idea what a Waymo is. So the idea that this is like the future of technology and like I believe in the tech as much as anyone else. but and I do think it has a bright future and will probably be a much bigger business, but it's not as big today or not as relevant today as it might get portrayed in Silicon Valley.
Yeah, but Nebraska's irrelevant to Uber's financials.
True.
A lot of these big cities aren't. Let's see if it gets wide adoption in a place like Dallas. I'm sure they'll go there eventually, just given the weather's probably it fits their criteria, at least for right now. Let's go through some questions. Had a lot of good ones in the chat here. Someone says thoughts on Waymo International. Guess we already hit that one. Here's one that's interesting. What headlines do you think would need to occur for peak Uber bear sentiment? What PE multiple do you think could occur at peak Uber bear sentiment? I don't think we're there yet. Or maybe let's use the baseball analogy. Fourth inning, I think. It
Yeah.
could get much worse.
More Yipit data would be detrimental, I think, to Uber's stock price.
Well, let's look how's Lyft holding up because they got hurt way more in that Yipit data than Uber. Uber's still at 50%. And they're
Yeah.
not. They're fine. Well, maybe it's just because the stock was so bombed out.
Yeah, it's so hard to forecast. Like, the thing is, if you're Uber, like, what do you do? Do you invest in self-driving or robotaxis fleet of your own? I certainly hope not. If you're a
They
shareholder,
quit
you should
that a
probably hope
long
not.
time ago
Yeah.
because they had the crashes. They are invested in they have stakes in some third party ones, but I think those ones aren't doing nearly as well as Waymo. Here's what gets the PE down to. And what do you have next 12 month at 20? 20 free cash flow?
Free cash flow, yeah, but that's
Here's what gets it lower to 15, 13 is if Waymo keeps its 10xing rides per week. If it hits 1,000,000, I know that's really not that. It's still what that would be less than 1% probably of Uber's overall trips. Even so, that's a round number. That's something that can get hyped up in news articles. Look, I write for the Motley Fool. I know how the sausage gets made. That's something that can work in a headline. The momentum of narratives just starts forming. This is how the same thing happened with TikTok and Meta and all that spending. People that don't look at the underlying financials, that don't look at what management is actually saying, can get things spun out of proportion. And that's where an opportunity could present itself.
this goes to show, like, when people say, "Oh man, I wish I could buy it on that drawdown." Like, I wish I bought it when it was trading at 15 times earnings. It's not trading at 15 times earnings, but let's say it were. This is a very convincing bear argument. Like, Waymo is eating their lunch in markets. As they expand, it's going to continue to eat their lunch. This is like the beginning of the end. It's like usually when it trades that cheaply, it trades that cheaply for a reason. You can go back and you say, well, Apple at a single digit earnings multiple had to be the easiest buy of all time. iPhone sales, I think, declined year over year when that happened, or there was a
Yeah,
big
or a
slowdown.
decade of growth, of unit volume growth froze, and then they stopped reporting unit volume sales, I think is what happened. So,
Yeah,
yeah.
it's harder. It's harder than it seems. What multiple would you be interested in this at in Uber?
Saying nothing changes, like, at this moment. Because
Yeah, yeah,
usually if
yeah.
the multiple falls, something's gonna change, but for the time being, I think I said 15 last episode, and I think I will keep it there. I am not uber bullish. Well, that's funny. I use that. I'm not very bullish on Uber and their capital allocation. I'd say I'm lukewarm on it. They're returning cash to shareholders now. They seem to be willing to take on some debt to accelerate a buyback program, and they're very profitable now.
And Uber
But
Eats is
there are these disruption risks. I think 15 times makes sense, and the upside from 15 times, if you are returning cash to shareholders, reducing the shares outstanding, and you have that end market growing at 10% a year for a long time, that can add up to some really good returns, especially when you have operating leverage in that business model.
Yeah. All right. Well, I think we've gone a little while on
We got other
Uber.
questions here
Okay,
that
let's take
some of
more.
these are good. In a world of autonomous vehicles, do you think people will own their own vehicles and rent them out, letting strangers enter dirty stuff into their cars? I think car ownership could go down a bunch. What's weird though is I'm curious how much it gets affected today, because if you actually run the math on like car costs, car insurance, gas costs, Uber makes a lot more sense to people than you'd think. But people still like owning cars, so I don't know how much that's gonna change things.
Yeah, especially if you're in a city or near an urban area. The it I don't know what it does. I don't think that it's gonna turn into like Airbnb where people are like buying car. I mean, I guess it's already happening to some degree with Turo, but
And
like
Uber, some people, they get the finance by their Uber, stuff like that.
I don't know, I just mean, do you think people would start creating these businesses where you're buying a fully autonomous vehicle purely as like a financial asset?
No, I think the platforms will own it. I don't think it's
Yeah,
gonna be owned at the personal level.
but that's the vision from Elon.
For Tesla, from
Is that
Elon.
you can drive it around during the day, or it can drive you around during the day, and then at night you can send it off to earn you money in your sleep.
But he's gotta sell vehicles to customers, so, uh, the incentive kinda shows why he has that viewpoint. Last thought here, and this one's interesting. What if Google or Tesla buys Lyft and gets instant demand? In my opinion, that's the real risk to Uber. Maybe? What do you think? A match made in heaven?
Maybe. I
Lena
think
Khan's gonna be gone soon here.
Google can Google's built, what is it? 7 different apps now, 7 different platforms that have more than 1 billion users. I think Google could build something from the ground up without needing to acquire a marketplace or an
Yeah,
aggregator.
Uber is built on Google Maps.
Yeah, to me, I think Google could do without acquiring Lyft. I think Tesla could probably create enough demand around its app as well. Um, Ly
Probably. Elon's very good at advertising.
yeah,
Although, you know what sorry, finish and then I have a
I wanna be
this is a
banking
little
on a
bit.
buyout if you're a Lyft shareholder.
Yeah. That stock was cheap earlier this year. Didn't we talk about it at one point? And we were like, "Ah, it looks cheap, but don't play in the second player." Stock went up quite a bit. But speaking of Tesla advertisements and promoting themselves, I saw them advertising a mega pack or something like that to me on Twitter. So we're seeing the dipping. We got to get Twitter's advertising revenue up. We need to, send some promotional materials over there.
It
Just a
is,
side
yeah.
thought. That's not a real topic.
Also, I don't know if my For You page is, like, if I've been, like, watching the wrong things, but it's pretty much, like, all Elon content. Like, not to
Well, that's
be
for you. The algorithm, he is deciding. The algorithm, everyone if you're on Twitter, you like Elon, you like me. That's what he says. Got to go
it's
following only Ryan.
I know, yeah, I have been. I really never considered it, honestly, until, the takeover, because then it just, like, the feed changed really quickly for some reason.
Yep.
But let's, uh let's shift gears a little bit. Did you see the Masa son? I think you mentioned this to me the other day, but did you see the video of him at the press conference announcing his investment?
I did not watch the video. I think I saw a screenshot, but yeah, he's
Did
he's
you
a he's a hype man, and he's the president's a hype man, or the incoming president. And
did you see
yeah,
Trump strong arm him? Like, did you see how when he was like, Masa son is going to invest $100 billion, Trump just on the spot in front of everyone was like, why don't we make it 200 billion? And then
I think that's
it
probably
was
a
like,
joke, but I guess I didn't watch it. Did it seem more awkwardly serious than
yeah, he did. Trump just stood there silently after he said it, and Moss's son was like, "Well, yeah, I guess we can."
he's probably
It's
just
just
pulling his leg. I think he likes to embarrass people, so I'm guessing it's not
it.
too
Yeah.
serious of it, but
What
more
does that even
importantly,
mean? Honestly, what does that mean from SoftBank's perspective? Like saying we are going to invest $100 billion into the United States,
it's just
just
US companies.
just buying stakes in the
Yeah,
U.S.
well, yeah, last Trump administration, they promised $50 billion, and they put half of that into WeWork. That's investing in America. I think what might be back is the VC and Masa Son funded consumer surplus for young Americans, and I'm excited.
Yeah. Well,
$5 Ubers.
give it time. Newman's gonna be back.
I read an article that said Flow is picking up, which is his new startup. Flow is picking up with everything that WeWork left off.
Oh boy. Well, you know,
What do you think about this $100 billion fund, though? Could be nice. Could be nice for. I'm not investing in any of these companies, but it could be nice for the consumer surplus. I think discounts are going to be back. That's what I'm excited about.
yeah, that's very true. DoorDashes of the world will be a little less expensive. Um, DoorDash orders, I should say. Yeah, I don't know. It just feels like a little bit of fluff to me. It could mean anything, honestly. Like, okay, we're just gonna
Yeah,
buy more Nvidia stock. Like,
that's true.
does that help America? I guess maybe.
Here's a headline for you. I looked up Adam Newman Flow, which is his new company. As you were talking here, this is a TechCrunch headline. Adam Newman startup Flow opens co-living community in Saudi Arabia. Do you want to move? You gonna join?
Maybe I'm too pessimistic, but I think co-living sounds horrendous. Like as a living arrangement. I can't think of something I would want less for like my own personal living arrangement. Like
Yeah,
you have to be like super communal with everyone in your apartment block. Like, is that basically the gist
yeah,
of it?
forcing that. I agree. There are those videos that have popped up on Twitter about these new communities, and they try to post them in that TikTok fashion. They're originally TikTok videos, but they post them in that fashion where they're quick jumps, and they show like the day in the life, and they go through it, and they go, "Oh, this is incredible! Everything's taken care of for me." And I look at them, and I think someone that one of the anonymous accounts from FinTwit had this take that I agree with. So, what do you do all day? It just seems like a really nice prison. I don't know. But I guess you can leave, so it's not a prison.
It
We had, we had a comment here that says Masa is going to fund the Series K for Databricks. Yeah, hey, these funding rounds are getting big in AI and cloud, so maybe there is $100 billion to throw around.
yeah. All right, I want to talk about the Match Group Investor Day, but before we do that, I want to talk about our new sponsor here on Chit Chat Stocks, Blue Chippers Club. Blue Chippers Club was recently started by two friends of ours with the goal of building a tight-knit community of stock-focused investors. Inside this community, everyone gets to share, break down their portfolios with each other, participate in weekly calls, and compete in fun portfolio performance monthly competitions. I honestly love this idea, and it's why we are promoting it here on the show. In fact, Brett and I are in this community ourselves and enjoy just how much value we get collaborating with others. And we also do participate in those weekly calls as well. It's just a really good sounding board to talk with other investors, see what they're seeing, maybe share some ideas as well. If you're interested in joining, head on over to bluechippersclub.com and hit apply. Right now, it is completely free to join. I got an email with a question asking how much does it cost? It's free. Like our friends here, they're literally just building a club of tight knit community a tight knit community of stock focused investors. So totally free to join at the moment. The link will be in the description. Do we
Okay,
want to
want to
talk
hit
Match
another
Group?
one, or do you want to do another ad? Let's just break it. Let's do the public one again before we hit the
Sure.
segment.
Yeah.
Yeah.
Listen up, folks. Time could be running out to lock in a 6% or higher yield at public.com. But You can lock in that yield with a bond account at Public. However, that yield is not locked in until the time of purchase. So you might want to act fast. Lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds only at public.com/chit chat stocks.
I checked out their 6-month treasury account too. Pretty cool. Pretty cool. They got some really good savings stuff.
Yeah, I use their high yield savings. I'm not sure. I think you're not like I'm not sure if it's the absolute highest, but it is up there. It's a very good
Yeah.
high yield savings account.
And they got all these other options for different types of fixed income and savings account you can use. I think that's one of their best features. All right, Investor Day, Ryan. There's 140 slides from Match Group talking a lot of big talk about the future of dating. You'll never guess AI and how it's going to help them.
When in doubt, when when your business is struggling, all you need to do to patch that bad boy up, a 140 slide investor day presentation.
Yep. Yeah. Oh boy. I feel for anyone that watched this whole thing because I just looked at the slide decks and our friend Alex Morris at the TSOH Investing Research Service had a great summary and analysis of them. Or maybe he's planning to do that. Either way, he's going to have an update on them soon. It came out already. Yeah.
Yeah, it did.
Here's what I had to take away. Essentially 4 things from the earnings, or excuse me, the investor day. 1, new 2% dividend yield, or dividend that's yielding about 2% right now. 2, promising $3 billion in cumulative free cash flow generation through 2027. 3, Tinder low single digit revenue decline in 2025. Would you say that's about 3%? They're projecting like a 3% revenue decline,
Sure. Yeah, that's
something like that.
kind of their lingo. Yeah.
And they are implementing a hefty buyback. Now, you look at this and you go, Tinder MAUs keep falling. They actually disclosed the chart this time, going back to 2016. MAUs peaked in 2022. They keep declining. And that's a concern. And they're projecting another revenue decline in 2025 for Tinder. So, contrary to what we believed a couple years ago, Tinder may be in a way worse spot than we previously thought. Well, it is in a way worse spot than we previously thought. And each year that it doesn't recover, it might not be fixable. However, and this is what I need a hotline for this stock because it has a market cap of under $8 billion, Ryan, and they're going to buy back $3 billion for the stock.
Don't do it, Brett. Don't do it. Okay. Here's the thing.
It might look. I think it might work. It might work if they stay. It might work. The stock might work.
$3 billion in free cash flow for the next 3
Billion
years.
and a half in SPC, probably. Yeah.
Yeah, that's what I was going to say. $8 billion. You hear that? That sounds great. $8 billion market cap. They're expecting $3 billion in free cash flow over the next 3 years. It is not that cheap. Factoring in SBC, it's not that cheap for a business that will potentially not grow for the next 3 to 4 years. Not grow the top line.
According to FinChat, you got a PE of 14.4. Hey, they might have added some new KPIs that you guys can put in there. Although they don't give the actual data, they just give the charts, and you have to kind of do a little line and maybe put a ruler on your computer screen and then go, okay, it's maybe 65, maybe 67 million that year. But PE of 14.4 is that's probably a better metric.
Is that cheap for a business that will? I would probably think flat revenue for the next 3 years is a price to earnings multiple of 14 cheap.
Flat revenue. Yeah, I think that's reasonable. I'm thinking about your revenue estimate. It depends, I guess, what currencies do. Just because that if the dollar appreciates, that really screws them. And if I guess FX neutral, yeah, say revenue's flat. It seems to be about fair value. You need to have a differentiated view on Tinder.
It is amazing to me how long it has felt like it's at fair value. I would say for the last
Is it efficiently
50
priced?
last
Yeah.
50% drawdown, I've been thinking, "It's not cheap, but it's a fair value." And then it keeps going down. The estimates or the growth expectations keep coming down, and all of a sudden it's like, "Well, yeah, I guess it never was cheap." Um,
Do you feel good
it's
that we didn't mark the bottom by selling earlier this year? Because there were some people that said we were, and I'm all good with them joking around with us. The losses are the losses, doesn't change anything. But they're saying that we are going to mark the bottom by capitulating at about $35 a share. And hey, not yet, my friend. We're at about $31 today. Are you feeling good about it? That you broke
yeah,
free?
I am very happy to no longer be associated with the company. Well, no longer own shares. There's a question here that says, "For Match, are you not just waiting for Hinge to overtake Tinder?" I think
I got a nice chart from. Sorry, go ahead.
that's basically what you're doing. I think you're the user trends at Tinder look ugly, and I think honestly, Hinge probably has cannibalized Tinder to some degree. So it could be 10 years out a better a better business. Like Hinge makes up 60% of revenue. It's the go-to dating app internationally. The average revenue per pair is substantially higher. I think it's almost double Tinder's. If it's able to replace it, that's great. But it's going to be a while until that point. And they're going to
Uh,
exhaust development resources on Tinder in the meantime.
that's another good point. I am looking at the KPI chart from our friends at FinChat. Again, use our link, finchat.io/chitchat. Get a 15% discount on any paid plan. Save yourself a lot of money. And hey, help out our show as well. From December 2020 to the last 12 months, which I'm not sure, do they give out Hinge revenue every quarter? So just say give or take last 12 months. The revenue has compounded at 60% per year, 59.5% to be exact. Gone from $90 million in 2020 for Hinge to $520 million over the last 12 months.
In the investor day had forecasts of I think a billion in 3 years.
Yeah, at that point, it gets pretty relevant to the business because what are they at, about $3-4 billion in revenue? I haven't looked at them too closely lately, but either way, if your thesis was, and this is part of I think our mistake in 2021, is Hinge was way too small at that point to make any meaningful changes. It could be a positive over the long term from 2021, but maybe today you have that thesis. I could see that thesis working out.
Yeah, you know what was a mildly concerning chart in that investor day was they talked about where like couples originate from, like what are the sources for people meeting? And there has been an uptick in social media over the last 2 years, I think, while dating apps have declined. Do you see that as a risk at all? Because we've said no in the past.
Wait, sorry, I'm confused.
There's been okay, basically they had like where people have met from, and it's for the last like I
Right.
think it's like over the last 5 years, and like dating apps is number one by a lot. There's basically bars, clubs, all the family, church, whatever that are just like at the bottom that are like 1% each. And then there's social media, which has grown uh,
Oh,
as a
so social media
percentage.
is taking some share.
Yeah.
That should be a concern. Yes. Although typically you have a symbiotic relationship between the platforms, I would argue, but maybe it's becoming less over time. Is FinTwit? People like value investors. A lot of matchmaking happening on there. I don't think so. Maybe it's
Value
Instagram and
value
TikTok
investors
instead. Yeah.
valueinvestorsdate.com. The
Let's see.
do we want to
Question
do
or
my small
comment
cap of
here.
the week?
Let's finish up with some comments here from the audience on Match. They say, is it similar to PayPal? Perhaps could be a similar story. Could be a similar story where revenue looks like better than people think, and there's this narrative. Yeah, and the PayPal, Venmo, and stuff like that. Yeah. I can lost it. Let's see. If Tinder ever stops the MAU loss, then the stock probably doubles. Yeah, probably. Probably. if it's for multiple quarters. Let's see, another question. Do you guys follow Boston Omaha? Oh yeah. Yes, unfortunately, my friend. We went to the
Oh,
annual meeting
yeah.
in 2021 and keeping it on the wait and see approach, I'd say.
Yeah, there were some red flags. I will say I like Adam Peterson. The thing there was a lot of like cognitive dissonance with that shareholder group, it seems, because people were like, these are the best co-managers ever. And then they basically ousted Alex, I think is his name, Rozek,
Little
and
coup.
he sold
Yeah.
his shares, and they're like, that's all right. He wasn't good anyways. And then but it's like, I will say I liked Adam Peterson a little better at the meeting, at least. The my big thing there is I just don't love the businesses. Like I don't really love the operating companies that they have. And I think that's where probably aside from the management turnover, where a lot of the struggle has come from for the stock recently. So that's I like the capital allocation ideology. I like the philosophy. I like Adam Peterson, but I worry a bit about the actual operating businesses.
I agree. Price to book's below 1 now though, and they have some stuff that's probably understated by book value. So, if you're optimistic on this business, stock looks fairly cheap. But yeah, let's move on to our next segment, small cap of the week. I as a little tease for the segment we're going to end with, I know people really enjoy Ryan's segment that he came up with in 2024, so I thought of doing another one, which is basically the bubble update. I don't know what we want to call it, if that makes sense, but essentially checking in on the bubble every week and deciding what stage of the bubble we're in, or if we're not in one.
How
And I have a
about how
there's
about we
really nothing to
do
miss. There was an infinite amount of things I could have chosen. I chose just a couple.
Yeah, that's not a bad one, but hopefully, well, if the bubble pops, we might be out of a segment there. What about I'll take small cap of the week, you take future small cap of the week. So most
Future.
concerning company.
Yeah, the stock that's done bad. That could work during earnings season, I think. But right now, that might be tough. How about market cycle update?
We could do something like that.
Something like that. Yeah, we can figure something out. But I think if the bubble crashes, there's probably even more or if the bubble pops and a lot of stocks crash, there's probably even more interesting things to talk about, at least for another year. So for the time being, I think we're gonna do something around bubble update, market cycle update. What inning are we in, as people like to say? But first, let's talk about small cap of the week. One that I helped out recently with Demand, the Auckland airport.
That's right. This is the small cap of the week presented by Yellow Brick Investing. We got to make sure to add that in there as well. They are the best place on the internet to find high quality stock pitches. So anytime someone gives you a tip, like we just had one in the comments here, someone says small cap suggestions, ticker KARO or SERV. You know what I'm gonna do? Go ahead. I'm gonna punch those into Yellow Brick Investing and see if I can find some high quality write ups on there. They're a great aggregator. Highly recommend checking them out. And we've got a link for them. It's yellowbrick.com/chit chat if you want to get a discount on a paid plan. But Auckland Airport is the company for this week, technically Auckland International Airport. They own and operate the largest airport in New Zealand. Um, Brett may have some anecdotal evidence for us, which we can talk about here in a second. But to give some context on the business, they're currently in the process of a 10 plus year period of elevated capex as they're building a new domestic terminal and eventually adding a second runway. The airport was built in the 60s, privatized in 1998, and it's been, as with most airports, it's been a nice profit machine for quite a while. It's basically it's hard really not to make money with an airport, it seems. And for a little additional info on the business. We've talked about airports a couple of times here, but there's three ways they make money. It's very similar to most other airports. There's the aeronautical revenue, which typically accounts for about just under half of EBITDA. This consists of regulated fees paid by airlines for use of AIA's runways or terminals. So it's basically anytime you buy a ticket for a flight, there's an embedded fee that you're paying in there that's a part of the price that the airline then passes through to the airport operator. So you're basically paying, it's basically a passenger fee, essentially. The second part that's important to the business here, which is about 40% of EBITDA, is retail. This is just rents and royalties from store operators as well as parking revenue on the business. And the last one is just property. So this is rents from warehouses, shopping centers, hotels on AIA's land. So Auckland International Airport, some airports have like this just like infinite lease essentially. That where they operate. Auckland actually owns the land and a ton of the land around it. So they have like some rental property revenue that gets included there as well. But in general, there are a ton of things to like about airports. One, they are straight up local monopolies and they've got built in pricing power, which typically makes for great profitability. However, given the recent expansion that AIA is undergoing, profitability looks a little rough. So, Brett, maybe you can share this chart from FinChat. Um, Revenue has basically gone up by 5.5%, 6% for the last 20 years. Free cash flow margins used to be basically 34, 35% consistently every year. And then they started this massive CapEx cycle. And now you're getting basically negative 50% free cash flow margins as they build out this second runway and domestic terminal. So, yeah, Brett's sharing it there. Basically, profitability has gone from 35% free cash flow margins to roughly negative 50. But you basically have guaranteed demand there. So, hopefully, that capex is worth it. The other good thing is that they state this expansion can take capacity from 25 million passengers a year to 50 million passengers a year, which would be a big revenue for driver for them because you're just getting more volume. And then you couple that with the incoming price increases, there should be a major revenue boost relative to their history. So it's been about 5.5%, 6%, as I mentioned, probably most of that coming from price increases and gradual volume increases as well. But here's a quote from a Yellow Book write-up. It says, aeronautical charges for international passengers are increasing 40% in fiscal year 24 and are scheduled to increase at a 12% CAGR over the 3 subsequent years. Charges for domestic passengers, which that would not be Brett. Brett was on the international side, so good thing you're flying this year.
Well,
Um,
I am doing some domestic flights, so I got to get a taste of both terminals.
Better get them done before the end of FY24. Might have already been
What
instituted, but
so what changes for domestic or what?
domestic charges for domestic passengers are increasing 52% in fiscal year 24. So this article is a little outdated and are
Jeez.
scheduled to increase at a 15% CAGR over 3 subsequent years. Today, they have a market cap of 7.7 billion. So this is really not small cap of the week. That's probably mid cap. Maybe even being a little generous there, but
International, undiscovered, not very many people know about this, right?
sure. Yeah, yeah,
It's
yeah.
our own rules, we can break them.
Yeah, that's true. I'm not sure what growth will shake out to be, but if we take the analyst estimates over the next 3 years, it's basically probably gotta pull this up on FinChat, but it's going from the typical 5%, 6% revenue that they've been generating, revenue growth, to I think it's 15%, 12%, 12%, and then I'm just tailoring it off at basically 11% for the 4th and 5th year. So little model here basically gets you to 1.5 billion in New Zealand currency dollars in sales. Now, the CapEx is going to continue for a while, so free cash flow margins should not revert immediately back. But let's say they got back to that eventually, 30, 35% free cash flow margins. That would mean $525 million in New Zealand currency in free cash flow a year. Today, they have an enterprise value of 16 billion New Zealand dollars. That means they're trading at potentially 30.5 times 2029 free cash flow. I like the business, love airport operators, but I don't see why you would buy this and not buy the Mexican airports instead because they're trading at a fraction of the multiple.
Yeah, I agree. Seems a little expensive. The CapEx is real, though. They have a huge construction project going, and right now you have to walk it's probably a mile with your bags from the international to the domestic terminal, which was not fun, with giant bags. So, maybe there's some ways to fix things. The fees going up, Yeah, I guess. They might have already gotten through. The domestic flights are pretty expensive. I don't Traffic's not gonna explode to New Zealand.
Traffic's up like
It's not gonna be Italy. It's just too far away. The geography doesn't Australia's not that big of a country. I mean, I think like 50 million people, but it's not gonna be Italy. It's not gonna be Spain. It's not gonna be Mexico. This ain't
yeah.
Cancun.
Is there any other airports that are even remotely close that they could maybe like cannibalize some routes from?
You mean cannibalize?
Like
No.
take
No.
because I don't know how they're projecting 25 million of passengers a year to 50 million, but passenger volumes over the last 20 years or like last 15 are barely up.
It could be a hub connecting to Australia and Asia just because of its where it's located. Besides that, I'm not exactly sure. Maybe they're betting on Australian and Japanese and Korean and Chinese tourists because that's fairly close. There are a lot of those uh, here, but is that really going to double?
Yeah, I mean, they can increase. That's kind of my concern. It's like they're doing all this stuff to increase capacity. I mean, they must have better visibility on it and be able to say, like, we are working at capacity right now. As we expand this, we expect to drastically grow how many passengers come through. But yeah,
But
I
even if
kind
it
of have the same
happens,
concern.
30 times free cash flow in a couple of years.
Yeah,
So
it's not good.
The Mexican ones seem much more attractive to me.
Yeah, absolutely. Okay, speaking of emerging markets, Argentina.
Yeah, do we wanna should I do this for another week or should I start my bubble update? Let's just do both. This one's quick. I have a quote here, "Time to invest in Argentina." There was an article in the Wall Street Journal today updating them with their new president, Javier Milei, and he said, "Inflation has fallen much faster than we even expected," where Milei was sitting in his office and he had a replica of a chainsaw sitting on a long table. The guy's entertaining. You gotta give him that much. Whether you like his strategies or not, he is entertaining. And the chainsaw, for people that don't know, is cutting through a bureaucracy. That's a good analogy, and it's a little aggressive. But here's the other part of the quote: "Everything indicates that next year we're going to have less inflation, higher GDP per capita, higher salaries, and less poverty. Could be a good time to invest in Argentina. They don't have the demographics of Mexico. They're not as big as Mexico. They're less attached to the United States. I think we missed one of the big winners, though. The Argentina airport. Should have listened to our Latin America correspondent, Ian Bisek, because I think this has been a 10 bagger.
Well, if you go to a 100 baggers list, it's basically just scattered with Argentine companies because of the inflation. So is that like in
Um,
local currency or
that's true. I think this is the New York Stock Exchange listing, so this is adjusted.
okay?
At the bottom
Well,
of the pandemic in 2020, we were trading at about $1.50. In March of 2022, we're at $5.50. Today, we're at 20.
wow.
This is the ticker is CAAP, Corporación America Airports. Through its subsidiaries, they operate airport concessions in 53 airports in Latin America, Europe, and Eurasia. And yeah, that's all they got here. I
When
think
you're
it's the
looking at
Argentina airport.
when you're looking at an emerging market, like you don't know anything about the market, it's maybe a little speculative, but you like, some of the trends, yada yada.
Airport.
W- yeah,
Look, yeah.
instantly the first businesses I look at are one, stock exchange, two, airport, three, maybe like a local lottery if that's privatized.
Yeah, I mean, there's one. You can also look at Colombia. They only have a limited amount that are available to invest just because of some rules. They have the biggest bank in Colombia. There's the oil company, and there's a few grocery stores that do well. Look, sometimes the basics. If you're betting on, and maybe betting on macro stuff's not the best idea, but if you're betting on that type of stuff, some of the basics can make sense. All right, let's get bubble update before we get out of here, Ryan. Not hard to find. And essentially what this I want this segment to be is just a check-in on what's going on. Because don't you feel like just out of the loop and it's all chaotic? with all these things, with all this stuff. We're focusing on earnings, and you see these things going on. You go, what even is happening with this market bubble? And hey, maybe we're not in a bubble. But first one, first one I have. Did you see MicroStrategy is joining the Nasdaq 100?
Yeah.
Flows are coming in.
Well,
Flows
it's
are
because
coming
they
in
have
now.
such a dominant software business.
Yeah, it's because they're such an important part of our economy. Yeah, I guess I have nothing else on that one.
Yeah, it's just well, yeah. We were talking about this earlier this week, but it's impressive that the indexes like the Nasdaq and the S&P 500 have been able to do so well when you have sort of this like bad incentive for inclusion, where it's like the company becomes big enough. It could be because of inflated multiples where it gets included and you're buying it at potentially the worst time. I guess it doesn't matter because it's just carried by the big 7 tech companies, but you would think they would potentially do bad because of that when things are
Yeah,
included.
8 now. Broadcom, $1 trillion market cap. All right, I'm going to show you this one, the last one here. Have you seen this? You seeing what
I
I'm
was
seeing
just
here?
looking at this. This is hysterical. Oh my gosh.
This is very it's mean. Whoever's doing this, look, okay,
Describe it.
yeah, let's describe it. There is a new Twitter account that's verified, and it's called Enron, at Enron, Enron. The tweet says, "Thank you, Houston, for coming to our town hall, for listening, for opening your hearts, for sharing your honest concerns. You inspire us, and we promise to make you proud. Hashtag Enron family." This someone's getting screwed here. This guy here, I immediately see a photo. This photo, I immediately don't. He's not being ingenuine. This guy is 100% disingenuous. Look,
Who is who is
look
this
at
guy?
his.
Does he have a
I
coin to
have
sell?
no one knows who it is. It's some. There's a crypto coin. There's a meme coin associated with it, and they're just holding up a poster that says, "We forgive you, Enron, the people of Houston." He's hugging a guy. Look at how disingenuous this is. Do you see this?
Here to listen. Who are any of these
I don't
people
know what's
even
going on.
are any of them even associated with Enron? Like the people at this event, were they affected by it? Or is this
I
just like
don't
some
think so.
staging thing?
I think yeah, we need eyes on this thing. We need to be monitoring this because I don't know what the hell is going on. It's like some meme coin. They're donating money to the citizens of Houston, $50,000. I am very skeptical. The guy is smirking like it's a joke the whole time. This tall young dude. Look at. Tell me you don't. Tell me he is not lying through his teeth by just the way he's smiling.
Yeah, it does look scammy. The other thing, and this is the biggest pet peeve of mine, is issue some meme coin, raise millions, say we are giving money, we are giving back to charity through this, and giving like $50,000. Like
Yeah, it's true.
that is such BS. It's yeah,
Yeah.
all right. Bubble of the week update is
Maybe it's a
first one's
working
coming in hot.
one. Yeah, we'll talk with the listeners. That's a good way to pitch. We have started our old chat community on Substack, and that's a great way to kind of discuss with us. It's better than Twitter, and it's all free. So just go ahead, join that. I'll probably ask just for some feedback. We'll work through what the listeners want, but I kind of think people enjoy getting an update around this just because when a boom is going on, things happen quick, and it can seem overwhelming, and you kind of just go at some points, what is going on? So we'll be monitoring the Enron coin situation uh, as whatever the hell it is gets uncovered. Yeah,
Yeah.
we're going long, but I should also mention that they did a staged stunt where they walked through New York City and someone pied this guy in the face, but it was all staged. It was clearly like fake.
Oh my gosh. Hey, and here we are talking about it.
Exactly,
Maybe
exactly.
it's working.
Yeah, hopefully we're not
Fluctuating
getting
a bit.
paid by Enron coin. That's for sure.
No. And
That's
you know
for
what we
sure.
should talk about at some point is the stock promotion scams from
Ooh,
stock
yes.
influencers. That's something would be fun to visit. All right, I
Talk
think
about
that's gonna.
investigative journalists. Yeah, those some YouTube channels did some really good work around that.
I yeah, I think that's gonna do it for today. Thank you all for tuning in. We've got some great shows slated. One that came out on Wednesday with Sean Wang, an absolute AI expert. So that one's good to check out. A little check in on the AI world and the landscape there. And then we've got an ASML update coming up as well, which will be a lot of fun. Um, and then we've got our 2024 predictions. Also, what other shows am I missing? Or sorry, 2025 predictions, 2024 recap.
We're doing no power hour the week of Christmas and New Year's. We have a special Sunday episode where I'm doing a stock research one on High Tide, a Canadian cannabis retailer that seems to be running away with the space.
All right. Well, that is going to do it. Thank you all for tuning in. I want to remind you that Brett and I are not financial advisors. Anything we say or discuss here on Chit Chat Stocks is not formal advice or recommendation. We may buy, sell, or hold any of the securities discussed in this podcast. Not Enron coin though. Won't be touching that. But thank you all for tuning in, and we'll see you next time.
All right.